Well, good afternoon, everyone. Welcome to our Building a Stock Portfolio class. I'm Connie Hill. I am not Kevin Horner. Kevin, I'm guessing, is going to be back next week, but I'm happy to spend some time with you here today in our Building a Stock Portfolio webcast. Now, when you're new to the markets and you're trying to build a portfolio, how do you know what kind of stocks to look for? Do you even have a criteria for the stocks that you want to start building in your portfolio? Well, we're going to talk about this today. And as part of that, I'm going to teach you a scan that some might consider using. All right. I am joined in the chat by good friend and fellow coach Mike Fairborn. Mike's already posted our X handles out there. Would love to have you follow us. I'm Connie Hill CS. He's Mike Fairborn CS. We'll post educational content throughout the trading day, the trading week, and probably now maybe not a ton of football, given that the game is over. The big college game is over as of last night. I hope you're happy with whoever won. If not, I'm sorry, there's always next year. That's what I have to tell myself for my team. There's always next year. All right, well, let's do this. We've got a couple of important items that we need to review before we get into our agenda. So let's go ahead with that. What we talk about today is intended for information and educational purposes only. Don't consider it a recommendation. We're going to be using the Pay for Money software application. That's what you download to your computer. It is the most robust version of Thinkorswim. When we put in stop loss orders, there's no guarantee that an execution of a stop order will be at or near the stop price. That's our intent, but it's not guaranteed it's necessarily going to fill there. Trailing stops and other conditional orders are held on Schwab servers and not routed until your order conditions have been met. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. All right, now, when you're looking for stocks to put on your watch list, I'm curious, I want you guys to chat into me. What do you think is one of the most important things you think you should look for? Okay, what is one of the most important things that you think you should look for? Go ahead and chat it in. Now, today we are going to consult some material. We're going to consult the stock investing course. We're going to consult a sample investing plan there. And when we go through the sample investing plan, there's a couple of fundamental analysis pieces we're going to build in to our stock hacker that will mirror the sample investing plan. Now, I don't expect all of you to be experts on fundamentals, okay? But some of you might be familiar with them. I know we've got a familiar name or two out there that I recognize. One of the things we are going to look at is a price to earnings ratio. The acronym for it is PE. You know, people say, oh, it's got a PE of whatever, okay, 17, 27. And that gives us an idea of maybe how it's priced compared to maybe other stocks in its industry group. We might do a comparison with PE ratios. Another one we're going to use here is we want to look for stocks that have some profitability. So we will look for return on equity. Now, I'm not going to say these are the most important things to look for, but they are going to play into what we do with that sample investing plan. So those of you that are looking, answering my question here, we've got liquidity, good uptrend, liquidity trend fundamentals, price, high trading volume. Denise has profit and loss, past performance, and future estimates. Yeah, we definitely are saying, what did you do for me today and last quarter, but really, what are you going to do for me the next quarter and the next year? There's a high deal of emphasis on that. Willie says maybe the return, the direction, and price and volume, and something about a strengthened relationship. Ray, I'm not sure what you were saying there. I may have missed part of your comment. In any case, I appreciate you chiming in, letting me know what are some of the things you look for, because sometimes when you're new, you're not really sure what you want to look for, right? Now, I'm going to hop over here to my browsers where we're going to start. Come in browser. All right. On the browser, I want to point you to some resources, okay? Some of you have been through these resources, the courses. Some of you, we have new folks joining us all the time, and they might not even be familiar that we have a course available. Well, where do you find the course? Log into your Schwab account. You can see I'm logged in. Come to Learn, come to Courses. And we have several different courses. The one that is going to contain elements that we're going to be talking about here today, I mean, a little bit of it is in fundamental analysis, but not a ton. But the stock trading with technical analysis, that's the course that you're going to be able to reference here. And one of the things we're going to be focusing on here is what we're looking for our stock. And we're going to come all the way to the bottom and go under resources. And under the resources, there is a stocks trading with technical analysis. This is bull flag sample investing plan, which is just a mouthful. Okay. However, this sample investing plan is going to give us some guidance as to maybe what we might want to put on a watch list. Now, so far in this class, Kevin has really focused on what we call top-down analysis, meaning looking for those stocks that are in better performing sectors, better performing industry groups, looking for the uptrends in those types of stocks. And what we're going to do today is called bottom up, which means we could bring in strong sectors and industry groups, but it's not going to be our first criteria that we're going to be looking for. Okay, so we're going to take a little bit different approach here today. So on this stocks trading plan, I'm going to go ahead and I've actually popped it up here and already blown it up a little bit. There's 4 pages that we're going to start on page 3, and this is where this bull flag sample investing plan is located. And really, let's just talk about a couple of the parameters that are here because we're going to use those parameters. Okay, we're looking for stocks, and we want to trade them in that are having a short-term rally. Let's get a darker color here. Let's go for this one. A short-term rally in an intermediate trend, or we could use a bull flag price pattern, which we'll explain later, and we'll be looking for an entry on it. Now, initially here, we're going to focus on this section, the watch list criteria. Now, I'm curious to know, those of you that are new, have you run across this sample investing plan yet? Have you found this? Or is this like brand new? Wow, that's sitting there and I didn't even know. Go ahead, feel free to chat in the chat where you are, if it's something you're aware of or not. Today, most of our focus is going to be on this watch list criteria. And we have an idea of what we might want to look for. Now it says we're going to use a scanner to find stocks exhibiting upward momentum and liquidity. Well, what's liquidity? Liquidity is essentially volume. Stocks that have a decent trading volume, they're going, exchanging with other people, gives you an idea that, okay, good, people are buying, people are selling. It should be easier to get into and out of than a stock that's not very liquid. Okay, which one is you? Okay, brand new to you, says Rick. News to you, says Lay Jeffrey. All right. Lots of you didn't even know about this. That's okay. We're going to spend a little bit of time on it. All right, so we want upward momentum, which is essentially trend. We'll talk about trends. We're looking for bullish trends, which means the stock's making higher highs and higher lows. Man, we love to look for those kind of stocks. Now, this one little bullet point here says that upward momentum can be identified with an intermediate uptrend using a one-day daily chart. And we will look at charts of some of these stocks that we take a look at here. And maybe you start with, you could, if you wanted to start even wider, you could start with maybe 3-year or 5-year, and then zoom into 1 year. And then as you're getting a little bit closer, you might zoom in, maybe do a 3-month or 6-month chart. Okay, just to kind of zoom in your focus here. But we're going to look for stocks that have an average daily volume of 500,000. That ties back to that liquidity. That lets us know other people are trading it. If you run across a stock and it only traded 1,000 shares today, or even say 15,000 shares. That might not be that comfortable. Okay, so the threshold we're going to use here today is at 500,000. And then we're going to look at stocks that trade at no less than what? $10 per share. Okay, so if we find something that's 5, actually, we're not going to look for something that's 5, but if we found something that was 5, nope, it's too low. We're going to make sure it hits that $10 threshold. And then this is, with enough liquidity, and sorry, my drawing went a little haywire here. Let me just kind of clean that up. Enough liquidity to reduce the risk of slippage. And really what slippage is kind of the difference between what you can get it for and what you can turn around and sell it for immediately. And if there's a big number there, a big gap, then you have a wider bid-ask spread. And the slippage just kind of means some inefficiency. If we're trading a stock that, say, is traded 5,000 shares today, we might see some big slippage because maybe that particular stock only traded 5,000 shares. Maybe the bid-ask spread is something like $105 to $107.50. That might be a $2.50 wide spread. That's pretty big. We're looking for just as skinny as we can get it. All right. We're not going to spend much time on the sample rules here right now. We're going to focus on this watch list criteria. And at the end of our class, we'll fold in a little bit of our entry rules here. Okay. Dennis says you're extremely new to all of this. Well, you are in the right spot. Absolutely. Kelly's letting us know you've been through it, Kelly. Excellent. You've been through it twice. Excellent. Repetition always helps, right? First time through, you're like trying to remember everything. And then the next time through, you're like, oh, yeah, I knew that. I remembered that. Good on me. All right. So with these concepts in mind, we're going to go over to Thinkorswim. We're going to go over to the Stock Hacker tool. And as I bring up Stock Hacker, we're going to get in, I think, to this one. Now, this happens to be Kevin's Thinkorswim. He's let me use it so we can look at the stocks you've been looking at and identify some new ones possibly to put on a watch list. Okay. So if it looks familiar, that's because these are the charts Kevin uses. So we've got the purple, I'm going to call it, I don't know, I'll call it purple, violet, whatever, is a 50-day moving average. The orange is a 20-day moving average. And I believe this blue is a 200-day moving average. Okay. So long-term trend of this particular stock is down. Short-term trend as measured by the 20 is flat. And then that purple looks like it's edging down a little bit. So we'd maybe say the intermediate term is a little bit more on the bearish side instead of the bullish side. Okay. Now, real quickly, let's jump over here. Maybe not real quickly. We'll spend a little bit of time here. We're going to go to the scan. We're going to go to the Stock Hacker tool. Now, you do not need to be an expert in knowing everything and all the parameters on the Stock Hacker tool. Okay, you don't. We're going to talk about some of those parameters. You're welcome to take lots of notes as we discuss it, and because it might be one that you want to create for yourself after you kind of find out what is entailed in this scan. So we're going to start out here looking at what a blank scan looks like. When we first go into Stock Hacker, this is what it looks like. But we're going to change it a little bit, okay? There's some different filters. It starts us out with 3 from the stock filter, and there's some different variables in there. And we are going to look at some of those. Now, the first thing that we're going to put on our Stock Hacker scan is the price of the stock. Now, from the sample investing plan, do you remember what dollar amount we should at least look for? Okay. We're going to change this here instead of the net change. We're going to put in, and you can use a couple of different things here. I like to use last, which is the last price. And we want that last price to be at least $10. Now, if you wanted to use the mark or the bid of the ask, you're welcome to, okay? Basically, we're just trying to get a stock in that area. Now, we're not going to use volume here. We're not going to use percent change here, because our purpose is to build a watch list of stocks that we're going to follow. And then when we find some entry signals on it, then we'll go ahead and enter into a paper example trade. If we do volume here, today it might be okay because this represents today's volume. But if you create this scan and you try to run it yourself first thing in the morning, it's not going to have much volume yet, right? The day just barely started. So we're going to get rid of both of these variables. We're going to get rid of this, and we're going to add on some additional parameters here. All right. First thing we're going to do is add two fundamental filters. So here's our different filters here. So we're going to go fundamental twice. And there were a couple things that were mentioned in the slides, in the fundamental analysis slides. I pointed out two that I said we're going to incorporate these into a scan. Do you remember what they were? Maybe, maybe not. If you got here late, you might not have seen it, okay? Well, one is going to be the price earnings ratio. So under fundamental, we're going to come down here, and there's a whole bunch of things we could choose, and we're getting to price, and we're going to do price earnings ratio. Again, that acronym, some people call it a PE, right, for short. Well, this number, if you've been somebody that maybe has been focused on maybe stocks not in a growth mode, maybe stocks that are in a maybe mature mode or stage of the life of the stock or the company, then you might have an idea where you might want that PE ratio to be. You might want to be a little bit low. We're going to give it some leeway on this scan because sometimes when growth stocks are starting to mature, starting to produce, sometimes their PE ratios can be kind of big. We're going to put a range on it, all right? We're going to use a range here from, let's start at 15, and then we're going to cap it at 80. And if you're somebody maybe that also has been looking for bargain stocks, you might get a little uncomfortable with that 80 number because you're used to looking for something much lower than that when you're bargain hunting, looking for value stocks. So just know you might be a little uncomfortable with it. All right. Next one, do you remember what the second one was that we were going to look for? We're going to look for profitable companies. All right. So we're going to change this fundamental skill, this fundamental to return on equity. Here's our return on equity. And really, we're looking for companies that maybe hopefully are moving up, I'm going to say somewhat quickly in their short term and their intermediate term trends, okay? And so maybe companies that are profitable maybe might be able to be in that mode more so than maybe companies that aren't earning profits, okay? So we're going to start at a minimum of 15, but we're not going to cap it. We're going to say, hey, if they get a 15% annual return on equity, that is happy camping, okay? You're going to like that. And actually, do you know what? I did something wrong. On this PE ratio on 15, I'm changing it, I'm sorry, to 7. When I was looking at my notes, I looked down at the return on equity, and that's where I grabbed the 15 from. We're going to change that to 7. So we'll go 7 to 80, but 15% return on equity. Now, the next thing we're going to look for is volume and trend. We're going to come over here to the add filter. We're going to come down to study, and we are going to punch on it 3 times. Now, study does not, that filter does not work on paper money, okay? Oh, you're going to say, well, what am I supposed to do then? Well, what you're supposed to do is go over to your live side, build the scan in the live side, share the results of that scan with yourself, bring it over to your paper account, okay? So that you can have the scan. All right, first thing we're going to look for is volume, and we're going to go average volume versus today's volume. And we're going to look for the last 20 days. We're going to see what the average volume has been on these stocks. And so that's why it says, you know, a moving average of the volume is greater than some number, it's bringing in 1,000,000. Now, we don't have to maybe necessarily go to 1,000,000. If your sole purpose of maybe creating this scan was to be looking for optionable stocks, then yeah, you might consider raising that threshold to 1,000,000 to 2,000,000. But we're going off of the sample investing plan for stocks. So we've got that there, an average over a lot of 500,000. That gives us the liquidity, hopefully reduces slippage, makes it easy to get in and out of. Okay, we're not looking for little obscure stocks. All right. Now, the next two variables we're going to fill out here are for the trend. One's going to be the short-term trend. The next one's going to be kind of the intermediate trend, which if you remember on the sample investing plan, it said to look for uptrends, short-term, and uptrends in the intermediate term. So first one we're going to do here on the study is we're going to look at price performance, and then we're going to go price change. And on the price change, we are going to look for closing price of stocks that is at least a certain percent greater than in the last X number of trading days. That's what bars are. So this first one, this is going to be for our intermediate trend. We're going to go 15. But over the last period of time on here, we're going to put down, let's go 63 bars, which is essentially what? About a quarter's worth of information is 63 days. So we want the stock to be up at least 15% than it was 3 months ago. Okay, that will help us with that intermediate trade. And then over here, we're going to grab that price again, price performance, price change. This one, we're not going to look for as big. We'll just look for, say, 5% over the last how many trading days? Here, we're going to go 21, which is about a month, 4 weeks. So that will say, okay, at least in the short term, the stock's up at least 5% above where it was earlier. Now, you might look at these and go, oh, that's a little strict, Connie. And you can feel free to experiment with these, okay? And see what seems to work for you. There's a lot of ways to skin a cat. There's some different ways to do trend. This is one of my favorite ways to do the trend, but you don't have to follow it, okay? You could use something else like price. There's one here that says price direction. But I like using the percent or the price change because then you can put in very specific values that you're looking for. All right. Now, this defaults to 50 stocks. I'm going to up it to 200. We're not going to get 200 back today. And we are going to sort them. It'll sort up by the alphabet. But let's go ahead here and maybe let's sort them. And this is really not material, but let's do it by return on equity. So those with an annual current return on equity will have it put the higher ones before the lower ones, which again, it doesn't matter a whole lot, okay? If you like this and you think, I want to keep this scan, come up here to the right of the flame, in that little flame icon is the sizzle index. Click here on the icon, say save scan query, and give it a name that you'll recognize. You know, I call mine growth stocks, but you might call it, you know, whatever. If you call it Connie scan, Connie will eventually teach you a bunch of different scans. And so maybe that's not the best name for it, okay? But something that you'll recognize and remember. When you do that, that's going to allow this scan to act as a watch list for you. And it can update every day if you save it as a scan, okay? So I will do this. I will call this growth. I'm not sure if Kevin has a growth on there or not. We'll call this growth 1. We're going to hit save. That's the name of it. And these are the stocks that are going to come back once we hit that scan. Whoa, look at that. It brought us back 83. Now you might be thinking, geez, 83 is a lot to look through. And it might be. Some of you might go, I don't want that many. You could change the number of results. You could say, give me 40 or whatever. And you could choose maybe a different sorting methodology. Symbol just kind of puts it alphabetic, so there's nothing really to really gain by just looking for the top 40 on the alphabet on it. Okay, so that's why I've changed it. All right, here, well, look what we have. We have a boatload of stocks over here. Now, because I saved that watch list, it can be dynamic and I can use it tomorrow and the next day and the day after that. But if I kind of want to work with this watch list, what it came up with right now, we might want to go out and save it. Okay, so we're going to come out here. I'm going to click on the icon showing 83 of 83, go to the right of that, save as watch list. And I did play around with this earlier, and we're going to put it, call it growth 1. Let's go growth, yeah, 1/20/26. Okay, today's date. Then if in 5 weeks I'm running that, I might go, time to update it. Time to refresh on this list. Helps if want me to share that with you, I can share that with you. Just know anytime we share scripts with you, they're not guaranteed as to accuracy or timing. And no, the results are always going to be changed on it. It can change. This will change throughout the day. Okay, so here's going to be our fixed watch list. And let's see here. Let's go to say share scan query. And I'm going to name it, okay? But I'm not going to name it Connie Scan. We're going to call it growth stocks. Okay, and that'll be the name of the scan. We'll hit share. Those of you that are here live, I'm going to paste this over into the chat window. Okay. Those of you that are looking at this on the recording, I'm going to record it. I'm going to post that in a different place so you can see what it is as well. All right. Let's do this now. Let's go see what came back. Okay. So on the watch list, instead of looking at the Dow Jones, we're going to go look for that new query called, I called it growth. I called it growth 1. And notice how it has this little purple icon off to the side. That lets you know it's a dynamic watch list, that there's some criteria that brings that watch list up and that it can change frequently, even within a day. You might run it or pull up the watch list in the morning, and in the afternoon, it might look a little bit different. Okay. The fixed watch list is right here, the one that I called growth 1/20/26. So I've saved the fixed list that'll stay there, stay that way. Maybe I use that for a couple of weeks, but then I've also got it saved as a scan. If I want it to be dynamic, then that allows you to do that. Okay, let's go ahead. Let's pull up this watch list. It told us we got 80, was it 87 or 83? We got quite a few stocks back on it. I changed my columns here. Yours might look a little bit different. I added a percent change because I wanted to sort it on stocks that were up today. Okay. Now, when you first run this scan, does it mean everything on this list is good and ready to go and you're going to love it? No, it doesn't mean that at all. But what it does mean is it gives you a list to start working with so that then when you get to the next part of the sample investing plan that's called entry rules, then you can start looking at them and seeing on a given day when perhaps a stock has an entry signal that you want to use. Okay, we'll talk about that in a minute, but let's just kind of look at what came back here. I'm going to go to the charts. I've got it linked. You can see that the watch list is in the 2 in a yellow box. And up here, I've got the ticker symbol coming in with this number 2 yellow box that links them together. Makes it really nice and easy for you to go through, review things. Okay, so the very top one up here looks like HBM. All right, what does this look like right now? Now, this is a 6-month chart. We could start at a 1-year chart. I told you I was going to bring it in a little bit closer. If we look at this, we're looking at this last 6 months. Geez, what day was that? Its low price on July 30 was down there at $8.93. And now it hit a new high for the year at $24.74. So is this a stock that's moving along? Yeah, it is. Is it a stock that's volatile? Yeah, it is. You might say, oh, I love volatility when the price is going up, but I really don't like it on the way down. That very well could be the case. But just know if it runs up a lot, it probably can have some heavy pullbacks percentage-wise, okay? And sometimes some of these growth stocks that we look for can fall into that category. Like you can see, it was of the stocks that it brought up, that's the one that moved the most today at 9.73%. Let's look at some more of these. Kinross Gold, gold stocks, gold mining stocks, silver mining stocks had a nice little bump today, as well as some other stocks that are kind of like in the precious metals or the precious materials, I should say. It's in a nice bullish trend here today. Some people might look at this and go, man, it had a nice little breakout. If we say this is short-term resistance, boom, it popped over it. That's exciting to see. Here's ELVA, sort of similar. Here's AU, AngloGold, so another gold stock. Again, it got a big pop early today. Sometimes when you see a stock that's up a lot initially on a given day, you might feel a little bit hesitant that you might feel like you're chasing it. And we just don't know if you're chasing it or not, right? One thing you can look for is to have extra volume. If it has high volume on a day when it makes an entry signal like a breakout of resistance and it has extra volume that day, then that gives you the idea that, okay, this thing is a lot of people are getting into it. We can see that volume go way up. And so more likely than not, it'll stay up. It's never guaranteed that it's going to stay up, right? Next day, it could come out with some sort of news that says, oh, gold's rotten and the stock falls or whatever. Okay. Very good. Let me go to this one, GFI. No, actually, I'm going to go to a different one. I'm going to go down a little bit lower. How far do I want to go on here? I want to start with NEM. And I'm going to go ahead and put in that formula or that link to the scan that we created on the Stock Hacker. What I'm going to do is I'm going to just do a text box here, and then I'm going to paste it in there. And there you can see that. So if you're looking at this on the recording, you might just want to pause here and then write this down. You can write the whole thing, or you can write after this slash and start with the 9 characters that starts with the exclamation point. It's cap sensitive, so make sure you do it a capital D, capital R, lower or capital D, uppercase S, sorry, lowercase r, and so forth. All right. So we've got this little stock here, Newmont Corp. They were up 4.22% today. Great, that's nice to see. On Kevin's chart here on the volume, it shows this on balance volume as well down here. It doesn't necessarily show today's average volume, okay? But when on balance volume is increasing in nature, that's something that can help you feel a little bit more comfortable about the kind of volume going into the stock and its trading, okay? How long do you plan to keep these stocks? Ooh, that's a good question. Well, we're going to do a paper trade here in just a few minutes, and we will talk about that. These stocks, you could use them for something shorter term, maybe identifying a bull flag and hitting a target, or you might say, you know, I like what these stocks are doing right now. I'm going to ride it as it goes up and pulls back, and runs up and pulls back, runs up and pulls back, as long as you keep seeing an uptrend being created, meaning higher highs and higher lows. You're thinking maybe you'll stay in it until you get, say, a lower low or a lower high. And then you might think about what you might need to do. Is the trend changing? Kind of depends on how big the move is. Okay. So you get to decide, and I think it's helpful to decide before you actually pull the trigger to say, this one, I'm going to trend trade. I'm going to ride the peaks and the pullbacks. Or this one, I'm gonna do a short-term target on it, and that target is X, and then you put in an order to get out when it hits X. You don't have to try to catch it, just have that order sitting there. Okay, very good. You want to share the chart? Art, I can share Kevin's chart here. No problem. Let's go ahead and hit share. Remember, any script we share is not guaranteed as to accuracy or timing. We'll send that out. And I'll do this as well. Let's edit this. And on the next row, I will put in, for those of you listening on the recording, that second one, which was basically Kevin's chart here with the moving averages, the black background, volume configured the way it is, RSI configured the way it is. Okay. Now here, what have we got going on? I could look at this stock and I could go, well, let me go back 3 years. Is it trading as high as it's ever been? Man, it's trading higher than it's been in the last 3 years. We see that. We could also come down here and choose over here, and we could choose max. And that's going to be on this daily. We can come up here and we can choose, oh, if that's year to date, max is on the bottom. Okay, max available. So this is forever how long this stock has ever been trading. Okay, so this is going back into, looks like 2016. Okay, so it's been around 10 years trading. Looks like it's at its all-time highs here. Okay, that's helpful to know, right? Because sometimes maybe it's coming up to a point where it was as high previously, and so we want to be aware that that might be present as resistance. In this particular case, it's not looking like it so much. Now I'm going to zoom into about 3 months here. Now, one of the things that we kind of just didn't really look at very closely on the investing plan were entry signals. One entry signal could be a breakout of a flag pattern. And you might go, I don't know what a flag pattern is. What is that? I'm going to draw it on the screen here for us. We're going to use our drawing tools. First, I'm going to grab this diagonal line here. And a flag pattern starts out with a flagpole, which is basically a sharp vertical move up. Okay, it's kind of a pop, pop, pop. Now this one goes sideways for a couple of days. I'm going to give it a little leniency there. Okay, we're going to call that the flagpole. And then a flag might consolidate sideways, and this one's kind of gone more a little bit sideways, but sometimes it might go something like this, where it pulls back and it kind of goes counter to the direction of the flagpole. Okay, either one of those flags is totally legitimate, and we look for a breakout. Well, today is when the price of the stock broke out of that consolidating sideways flag area that it had been in for 3 days. And so we might consider that as an entry. Now, if we do that, we can use the height of this flagpole to measure and say, that's what our next expected move roughly might be. Is it guaranteed? Heavens no. There are no guarantees in the market, are there? So I'm going to duplicate the drawing, which is so that we can have that height. I'm going to grab it and I'm going to put it at my breakout zone. Now, my breakout zone here is on the outside of the flag area. If you want something more conservative, you can drop it down to kind of maybe the bottom area of the flag. You could do that as well. Either one is just fine. For the interest of time, I'll use that lower one just because that's the last one I pointed to. And then we could put our mouse on here, and it's going to give us some information that says this line, it took it about 9 days to go. It went up about 16.86%, and it's looking for maybe like an $18.32 move. That's not bad, is it? That's not too shabby. Let's select on this real quick. What I want it to do is I want it to show actually what this number is. It's not ballooning out on us. There it goes. It ends at 128.41. So if we wanted to, we could put a target to say 127, 128, if we wanted to use that as a short-term target. So let's go ahead and do it. So that is, let's go with, I need to stick the number in here. Let's go with 127, okay? I just need to stick it somewhere in case I need to refer back to it. We're gonna go to the trade tab. We'll go, oops, that's not the stock we're on. We are on AEM. Oh, this one was a red one. Let's change it to the yellow too. There we go. Now it floods in there. And we're gonna select on the ask price here. You're going to notice there is a little bit of a wide spread at this moment when the market's closed down like it is right now. Then sometimes the bid-ask spread gets out it widens out a little bit. But then the next morning, it'll start trading. The market will open. That'll kind of cinch back up. All right. But we can see the last price was 118.94. Okay. Uh, so we can take this price. We're not going to worry too much about exactly what it is. Okay. And I did a little position sizing before we started our class. We're going to go ahead and we're going to do 50 shares of this stock. We're not going to do more than that. We'll go ahead and maybe put it at the midpoint price, midpoint between the bid and the ask. And in the morning, if it doesn't fill, we might want to go back and change that. Okay. If we wanted to put a stop loss on this, we might say, well, if the price drops back down into the flag area, we need to be out. That means it's not following through with the pattern. So we're going to put, just say 109.70 as a stop. So what we're going to do here, we're going to change this to first triggers OCO. We're going to create two opposite orders, one there, create opposite order here. This first order, we're going to put it that 127 as a target price. And then this one, we're going to make this be a stop price, which will trigger a market order. And that stop price, what did I tell you? What did I tell you I wanted it to be? It was 17, let's see, about, I think it was, let's go with 108 here. Okay, 108.27. We'll put it there. 108.27. And then we want both of these good till canceled, right? We don't want them to expire. We want them to stay there. And then if it hits our target first of 127, boom, gets us out of the trade and cancels our stop. If it hits our stop first, boom, we're out of the trade with the market order. And then we don't have that extra limit order sitting out there. Okay, we're going to go ahead. What is it not liking? It wants this to be good till canceled as well on that buy price. Now it'll allow us to go ahead, check it out, make sure you didn't make any mistakes, just proofread it, and then send it on over. All right, Kelly says he likes to rotate at 8%. This is saying it's not available to borrow. Not sure why it gave us that message. Let's just take a quick look here, though. Let's go over to the monitor. Well, let's get rid of this. Monitor, let's see if it's sitting in there. Nope, our stop losses from previous classes are sitting in there. I'll have to go back and see why it did not like that. Because it put it out here as a canceled order. There's our buy price. It could have been the buy price here that it didn't like. So it rejected all three of them. I have to go back and look at that, see why it might not have filled and re-queue it up. Okay, don't know what the answer to that is, but it should have gone in just fine. All right. Now, in our last couple of minutes, there's just a couple things I want to encourage you to do. Number one, if you haven't subscribed to our Trader Talks channel, you'll want to do that. It makes it so much easier to find our content, right? If you want to go out and see a class, maybe say Mike Fairborn has done, yeah, you come out here and you're able to see, if you come over here to our Trader Talks channel, and then you can see what's coming up. Now, this is the last class of the day, so we'll start first thing in the morning, Trader Talks in today's market, okay? If you wanted to notice so you didn't forget, you could just click on that and it'll send you a notice using your account, your email account. Now, if this was helpful for you today, take a look at maybe how you might create a watch list. That was helpful. Go ahead and hit the like button on the way out. And Mike and I would love for you to follow us on X. I'm Connie Hill CS. Mike is Mike Fairborn CS. Mike, thank you so much for helping me out here today. Thank you to each and every one of you for spending a little bit of time with us here as you wrap your day up in the market. All right, so we'll see you first thing in the morning right at the opening bell with Trader Talk in today's markets. And I would encourage you to build a little watch list, whether you use this exact scan, maybe you vary it a little bit. Maybe there's some other things you have decided are a preference already. build a scan so that you always have stocks that you could be watching for entries on, okay? In your paper money account, of course. All right, you guys have a great evening. We'll see you tomorrow morning. Bye-bye.